This is another sign of the times, an analysis and a commentary. Wall Street's games and oil prices. Americans are about to experience more pain at the pump because of crude oil speculation and market manipulation. There have been a lot of funny things happening in the market over the last 2 months. It can be chalked up to a combination of end-of-year seasonality and a desire by the powers that be to keep the market together long enough to exit ahead of the fall. Something similar happened in 2008 before the most acute phase of the last bear market got started. Wall Street has apparently been using large-cap energy stocks, Exxon Mobil and Chevron, to hold the Dow Jones Industrial Average aloft, ostensibly to keep retail investors placated so the heavy hitters can create the little upward flurries they need to exit their position. This has to do with the fact the Dow is a price-weighted index that can be pushed around by the most expensive stocks. But it cannot last, and the games are about to hit vulnerable consumers at the gas pump and threatens the economy at a time of danger. Consider this: Chevron is trading at new all-time highs, but measures of internal market strength, such as the percentage of NYSE stocks above their 50-day moving average, remain well off their highs and are arguably in bear market territory. The buoyancy of crude oil, despite the recent strength of the U.S. dollar, the collapse of other industrial commodities like copper, and the decaying economic outlook in Europe and Asia, has been instrumental in this, enabled by a recent pullback in the U.S. dollar, which is ending now, as well as Iranian saber rattling. So, the U.S. economy is supposedly decoupling from a weakening Asia and Europe. Stocks and crude have been floating higher as economic data, mainly based on sentiment surveys, has been surprising to the upside. Yet the real, hard activity-based economic data hasn't really moved. Again, this is behavior that was last seen the middle of 2008 before the market fell apart. Here's the thing, some say. This decoupling is being driven by two temporary tailwinds. The first is a drawdown of the savings rate from 5% to 3.5% as consumers, tired of denying themselves, splurged this holiday shopping season. The bills will come due, and with wages stagnant and the economy shedding high-quality, high-wage jobs for low-quality, low-wage retail, temporary, and accommodation positions, it will be hard to repay them. That, according to economist David Rosenberg, translated into a $150 billion boost to consumer spending power at an annual rate in inflation-adjusted terms. The second was the drop in crude oil prices from the highs reached last spring as the Arab Spring heated up and took down Gaddafi in Libya. Between May 2nd, the commodity price peak created by the U.S. dollar spike after Osama bin Laden taken out, and August 9th, crude oil lost 34%. This primed the pump, so to speak, for a slower but sustained fall in gasoline prices. Between May 2nd and the end of November, gasoline futures dropped a whopping 40%. That, according to economist David Rosenberg, translated into an $80 billion boost to spending. So, the economy has been drugged by $230 billion in temporary support. No wonder it's decoupling. But this is ending now. For one, crude oil bottomed in August and has been rising ever since. It built up a big head of steam in October and November as hedge fund types piled into one of the few trades that worked consistently well. As a result, crude oil started a decoupling of its own, outpacing industrial metals, copper, and even gasoline prices because those other assets just didn't look as attractive to speculators. In other words, the market is being manipulated by speculators. Yes, it's about greediness and making a lot of money. So in fact, the performance gap between gasoline futures and crude oil reached levels not seen since the 2008 commodities bubble. Again, similarities with 2008. So, it was the best of both worlds. The speculators profited from higher oil prices, while consumers benefited from cheaper gasoline. Viva decoupling. Naturally, petroleum refiners weren't about to tolerate a prolonged compression of their profit margins. And sure enough, as crude oil stagnates near its November highs, gasoline prices are surging higher. As gas prices start rising at the pumps and those holiday bills come due, high-flying consumer sentiment is going to get blown out of the sky, just as hedge fund types feel pressure on their long crude positions. And that could push the savings rate back up, too, as consumers respond to higher energy costs. Suddenly, Wall Street's obsession with its latest plaything, crude oil, isn't going to be so benign anymore. The U.S. economy will recouple with the rest of the world as the recent swing in oil prices works its way through the energy supply chain, like a cancer, pushing up gas prices. And the start of Q4 earnings season next week will remind everyone that corporate profits are set to fall for the first time since the recession ended 2.5 years ago. This is a warning. And this is also a part of a bigger picture. Everything that must change quickly or rapidly, and for the better, because these are more signs of the end of times as we know them. Transition Day, which is a time of extraordinary happenings, changes, and events, because it's about what kind of world are we leaving to the future generations. In other words, it seems to be that gasoline prices are going to go up, no matter what. Yes, everything is connected, and everything is numbered. It's also called fate or destiny. Matthew, chapter 24, verse 15. When ye therefore shall see the abomination of desolation, spoken of by Daniel the prophet, stand in the holy place, whosoever reads or hears, let him understand. 16. Let them which be in Judea flee into the mountains. 17. Let him which is on the housetop not come down to take anything out of his house. 18. Neither let him which is in the field return back to take his clothes. 19. And woe unto them that are with child, and to them that give nurse in those days. 20. But pray ye that your flight be not in the winter, neither on the Sabbath day. 21. For then shall be great tribulation, such as was not since the beginning of the world to this time, no, nor ever shall be. 22. And except those days should be shortened, there should no flesh be saved, but for the elect's sake those days shall be shortened. Again, it's time for prophecy to be fulfilled, and all these are more signs.